Every month, I sit down and tell you what smart investors are buying for this month. However, it is July, which means that if you have been a subscriber of this channel, it is time for me to tell you what I bought, what I sold, and what things I perhaps was wrong about. What did I lose money on in my portfolio? And also talk about some of the wins. Let's go ahead and break down my portfolio. We do this twice a year for several reasons. This is my investing philosophy. It's my portfolio. I do what I want to do. But it is research-based. I've described it multiple times, and you can click somewhere on the screen or in the comment section to go back and watch the video. I don't think I need to repeat it here and make this video any longer than what it needs to be. But what I will say is this. I do believe in transparency. If I lost money on a stock, I will say, hey, that didn't do what I expected it to do. So this is my effort in doing so. And also, you know, if there's an app out there, I'm not going to tell you to go and download that app and try it, or hey, I got a sponsorship deal or whatever, if I haven't tried it or put my own money into it, right? So every stock that I say that I like, it is because I would put my own money into it, or I put my family's, I would consider putting my family's money into it, so on and so forth. But I do practice what I preach. I don't make moves in my portfolio until mid-year, right? And until the end of the year. So these are stocks I bought, sold, and everything in between. And you guys can go back to December and see exactly what I did back then. And those two things should line up. All right. So I do have these across a number of different apps because I test out a bunch of apps to see what is good and what is not for y'all. Okay. I don't recommend that everybody has so many apps as I do. But again, I do this for y'all. So if somebody asks me, is M1 a good app? I can tell you from experience. And I have a lot of good things to say. You want me to do a review? Let me know. All right, so let's first start off with the things that I sold or lost money on and pivoted away from. TJ Maxx, TJX, I lost money on it. Now I only lost 0.96% at the time that I sold it. Now, thankfully I didn't have a ton of money in it. Also, I mean, that amount of money isn't, you know, that percentage is not the worst thing in the world. I thought that this would be a much better stock than what it was. Now, I have seen worse in my portfolio before, and honestly, of course, I thought it would have been great. Otherwise, I wouldn't have put my money in it, right? Nobody decides to buy a stock if it is going to lose money. The logic behind it is the same logic behind why Ross Stores is doing well. I picked between those two. I chose wrong. So yeah, TJ Maxx let me know. I would still shop at TJ Maxx, but TJ Maxx didn't do what I expected it to do, especially with inflation, which is still high. I thought people were looking for discounts. I thought they were looking for it at TJ Maxx. Apparently the stock does not agree. Next one here, so obviously I sold out of that, took a loss, went on about my business. Next one here that I pivoted away from was Invesco. Invesco was doing well, clearly at the time that I bought it, but it's only up 2.59%. I pivoted away from that one. I'm taking my little bit of gain, taking it, going home. I might as well just take it and go. Okay, so at the time that I bought it, it was up well over double digits. Now I did do some dollar cost averaging. Perhaps that did not help me in this case, but it is what it is. I'm not mad at it, but again, I think there are better stocks, and we'll talk about that I can pivot to, and that's what I'm going to go ahead and do here. So this is more of I'm taking my gains off the table. You didn't score as many points as I expected you to, so we're going to go to something different. Shifting to a positive note, though I did sell, is GE, General Electric. This is one that we did talk about. I don't think perhaps we didn't talk about it enough, but I have, and if you are a longtime subscriber of this channel, this right now is your opportunity to do so. I have told y'all about the aerospace industry well before the Iran thing. I'm sure more aerospace companies have perhaps done a lot better since then. But before that whole thing started, I have been, it might be a year now that I've been talking about aerospace. I talked about Honeywell, all of those. GE, I made 17.26% on that. Now, I went ahead and sold out. In a world where the stock market is up more than double digits, at least at the time that I sold, and there are other stocks that are doing even better than that 17%, I think I can pivot to something that can do better. Is that greedy? Maybe it is. In either case, I'm selling GE, I'm bouncing off, going somewhere else. Now, those are the stocks that I am pivoting away from, and those were the younger stocks. I think all of those are probably going to be a short-term gain for tax purposes. If you are someone like, hey, how much are you going to pay in taxes? How's it going to impact you? I have a whole tax calculator and how that works, and a whole explainer there, so we don't have to cover it here. Now, the next one here is a stock that I bought within my M1 account. Most of these so far have been in my M1 account. Is Broadcom. Broadcom, I did make 39%, very good. I can't complain with that gain, but Broadcom, for whatever reason, has started to stall out. So again, I'm taking my gains. I'm going somewhere else. I don't know what is happening with Broadcom, and frankly, I don't care. I'm taking my money and I'm going somewhere else. This is the whole point of me reevaluating. I don't have to sell, but reevaluating every 6 months. Also, and this is why I'm not saying that you need to do exactly what I'm doing, is because all of these, and again, these are in different accounts, so I'm selling for different reasons in different places for different reasons. Every type of account has a different tax, implication, and some don't have any implications at all. These are in my M1 account, the ones that I'm selling for bigger gains, for these gains rather. These are like, $50 gains, $12, like very, very small, because I'm testing these things, but the gains are still there. Going back to taxing, you need to pay attention to what you're selling these for and where you are selling them. If you're selling inside of an IRA, it's not going to be, as quote unquote painful or any pain because it's tax deferred. If you're selling this in something that doesn't have any tax advantages, it's something you want to pay attention to. Now I want to pivot to the stocks that had a much bigger gain. All of these are 3-digit numbers here, and these are pretty big pivots. All right, so the first one is Costco. I've been holding on to Costco since the pandemic. I very vividly remember buying Costco probably the first time in 2020. I've had Costco in different accounts, so it's very hard for me to remember, was it in the IRA was the first time, or was it on public for the very first time? But this time I sold Costco. It was on my Fidelity, so it must have been probably IRA. 165% gain. Costco has stalled out. I'm taking my money. I'm going somewhere else. And I am pursuing a strategy here to simplify things. I'm going through a whole rebalancing era for myself. I may do a video about what I'm doing. It's a bit more complex, so we'll see if that belongs on YouTube or members only. Either case, Costco's gone. I'm taking my money, going somewhere else. I'm also selling Berkshire Hathaway. I feel a little weird about doing it, but Warren Buffett retired. The stock isn't great. It's not class leading anymore. I'm taking my 75% gain. You do not go broke taking a profit. So I'm taking my money. I'm going somewhere else. All right. 75% gain. Now, these are long-term gains. It clearly ain't that it did this in the last 6 months or even did this in the last year. All right. So taking my gains for both of those, and I'm leaving. I am selling what used to be, and maybe it still is, but I'm not selling at all. I'm trimming Microsoft. I did a video many years ago. You can check out that video here. It's before AI, so there's that. But I'm trimming Microsoft. Microsoft was roughly 6% of my total IRA at one point, cutting it all the way back to just 2%. Microsoft is not doing well. If I remember correctly, I think last week it had hit like a 52-week low. Hey dog, you don't get to stay on my roster doing stuff like that. You got trimmed. Now that is a 155% gain for me. Yay. But also, I don't like that. I don't know what direction y'all doing or what you're doing over there. You need to fix it. They also laid off, I think, like 3,000 Xbox employees. I don't have an Xbox, so I'm team PlayStation. PlayStation they got to beef with me too. But in either case, that's not good enough for me. So I'm glad I got the gain, but I had to trim Microsoft. And I'm simplifying a lot of my portfolio and moving it into these stocks here. The first stock that I'm buying is Target. It is up 24% in the last 6 months and up 28% in the last year. Target has done well ever since they hired a new CEO, and apparently the boycotts are over. I don't know. They have been boycotted several times by several groups in several ways. We will see if they survive this season, but it actually feels like they get boycotted every summer. But in either case, the CEO changed. things appear to be doing well. I'm going to ride the wave. We'll see in December if this does continue. They also do pay a solid dividend. The next one is EEM. Now, this is an emerging markets ETF. This is something I have spoken about before. We've talked about it on this channel. Again, if I didn't believe in it, we'll be talking about it on this here channel. But selling some of those things, trimming something like a Microsoft, I'm simplifying the number of stocks I'm buying and getting some international exposure. I've talked on this channel multiple times about buying international stocks. That is one of them. I'm also buying VT. That is the Total World Fund. Doing some of that too. Now, those are two ways I'm adding international. Because I'm not the riskiest investor in the world, there's more VT in the portfolio, or how I'm allocating this, than there is EEM. So just throw that out there in those allocations. The next one is Principal Financial Group, PFG. It is up 27% in the last 6 months and up 40% over the last year. I had said earlier that some finance stocks to be more specific, some finance stocks have been doing quite well. This is one of them. Now, insurance, it can be hit or miss. I feel like every 2.5, 3 years, we do find one that does do well. I was gonna say the umbrella company. We do have another insurance company here. Travelers was doing well. We did buy Principal, I think, in 2021, and it did well for a little bit. So perhaps this one's cycling back around. I'm gonna go ahead and hop on to it. Typically speaking, insurance companies usually stable. We'll see if that continues, and like all of these, we will evaluate in 6 months, see if this continues to hold, and then we'll see where the economy and the stock market is at that point in time. In addition to it, sticking with the insurance theme, United Healthcare, UNH, I know it does have some issues. I am buying and holding on to it primarily because of the insider buyers. I've said this before, when insiders buy, that is usually a good sign for us, the investors, as well. It does look like there was some insider buying activity. Now, what that means is they have put more money into it. Now, whether it's a stock reward or they're pulling money out of their own pockets to buy more, either way, it's more insider buys than it was sales. And when we do see that, the stock tends to outperform the stock market as a whole. Speaking of that, even before then, it started to show some very positive momentum. For example, and let me pull this up to be exact here, as you will see it on the screen, but so I can see it here. The time I'm doing this video is up 28.5% in the last 6 months, and over the last year, it's up 42%. And it did have a pretty significant dip in March. What didn't at that point in time, but again, stable when it comes to insurance. I'm not going to sit here and say that it is tariff proof, because I thought Netflix was tariff proof. Thankfully we got out of Netflix probably around this time last year, but in either case, I thought Netflix was tariff proof. Clearly it was not. Netflix has also fallen off. Thankfully, we have the 6-month process so we can reevaluate things, hop up out of things before they get even worse than they currently are for a company like Netflix. But in the case, UNH is one that I'm picking up. And then we move on to Delta Airlines. Delta is not a company I would have expected to do well in this environment. With gas prices going up, with inflation the way it is, I would not expect people to be flying, and especially flying Delta. It's not known as a inexpensive carrier. However, when I consider the broader context of a K-shaped economy, rich people still doing what they want to do because they got the money, perhaps Delta is the number one choice option for that. But Delta's up 24% in the last 6 months. I feel maybe all good stocks are up 24% in the last 6 months, but that is what's showing up on my phone at the time I'm doing this video. And I will also put updated graphs at the time that you are watching this, which may be slightly different. And in the last year, Delta's up 48% in the last year. So 24%? Yeah, 24% and 48%. I mean, that's strong. That's incredibly strong. But it speaks a lot more to those who can, again, pay more, even going through the high price hikes with gas fees, fuel, and everything else, compared to what Spirit went through in closing altogether. But those are the things I bought, I sold, and the logic behind it. Thankfully, we only had one stock that was down. Now, we'll see what happens roughly 6 months from now. If you want to know more about investing and what may fit for your portfolio, you want to check out these videos right here.